Hi everyone, so today we're going to be looking at double entry made easy. As we covered last time, there are 5 elements to accounting, and we covered before assets is the same as liabilities plus equity. So double entry is all based on the principle that every transaction has at least 2 effects. For example, if an owner of a business puts in £10,000 into the business, this is having multiple effects. Let's see what the effects are. So if he's putting in business, cash in the business is increasing, so that's increasing assets. He's also increasing capital, because if you're putting the fact that he's putting in money into the business and funding the business is increasing his interest in it and increasing capital, and therefore equity is increasing. So and overall there are 2 effects. There's increase in assets and increase in equities. Let's do another one. So this time the owner of the business draws out money from the business. So what's that going to do? Well, he's taking out cash. The cash is going to reduce, therefore a reduction in assets. But on the other hand, he has less interest in the business because he's less money is invested in the business. You can think of it like that. So equity has decreased. So you have this time a decrease in assets and a decrease in equity. Let's do another one. So this time the business borrows £10,000 from someone else, which it has to repay. So it's got in it more cash, it's borrowed money. So your cash in the business has actually increased and you've increased your assets. But on the other hand, the £10,000 is owed. So your liabilities have increased. You have an obligation to repay that £10,000. So in this example, we saw that to increase the assets, we're increasing liabilities as well. So, it's like a necessary evil. Let's do the same example, except this time the business repays the debt of £10,000. What is happening? Well, your cash in the business is decreasing because you repaid the debt. So your assets have decreased. But on the other hand, the debt has been repaid. There's no longer the obligation, and you can relax and chill. So your liabilities have decreased. So as we saw, there's a decrease in assets and a decrease in liabilities as a result. So there are 2 effects. Now double entry is about the concept of balance. It stems from this formula: assets is equal to liabilities plus equity. So, and the principle is that for a given transaction, the sum of debits is the sum of credits. And I'll explain a bit more what this means. So imagine you have a balance. You can think of this equation as a balance, right? If I increase, we call assets a debit balance, and we call equity and liabilities credit balances. So if I increase, they have to balance each other off. How can you increase assets in a business? Well, you can either do it in 2 ways. Using this equation, you can either increase equity or you increase liabilities, as we've seen in the previous examples, like the owners putting their own business money into the business. That's going to increase the business's assets, or somebody else giving you money is also going to increase your assets. So we say that when we're increasing assets, we debit assets. When we increase liabilities, we credit liabilities. And when we increase equity, we credit equity. Okay, so learn these off and think of the logic behind them. We'll go through some examples to cover it a bit more. So I just wanted to summarize again. So for a given transaction, the sum of debits is the same as the sum of credits. And here's a way of remembering it. So we put the debit next to assets, we put the credit next to liabilities, and we put the credit next to equity. And we did discuss that debit assets is increasing assets, but for the other 2, you credit them to increase them. So therefore naturally follows that if you're debiting assets to increase assets, you credit assets to decrease them. Or if you're reducing your liability, you debit liability. Or if you're reducing equity, you debit equity. Okay, so it's the tale of opposites. Now let's go through, use these principles of debit and credit to apply to the examples we went through. So we saw that assets have increased. For this example, where the owner is putting money into the business, we saw that assets have increased by 10,000 and equity has increased by 10,000. Right? So there's an increase in assets and increase in equity. Now, if you're increasing assets, you have to debit by £10,000. You have to debit assets 10,000 and credit equity 10,000. Okay? Let's do another example. So increase assets, debit asset, increase equity, credit equity. This time around, we have a decrease in assets and a decrease in equity of £10,000 each. So what happens? Well, decrease in assets corresponds to credit asset of £10,000. Decrease in equity, you're debiting equity, so you do debit equity £10,000. And I've written it, you normally put the debit before, you normally write it in this order, so you say debit equity 10,000, credit asset 10,000. I've also put capital and cash because those are the specific names of those accounts, right? You always want as much detail as possible when you're accounting for something so that you can follow it when you look back at it later on. Let's do another one. So we looked at these examples together. So when the business was borrowing money from somebody else, we saw an increase in assets of 10,000 and an increase in liabilities of 10,000. So can you guess what double entries we do? So increase in assets, we're debiting assets, and increase in liabilities, we're crediting liabilities. So debit assets 10,000, credit liabilities or loans £10,000. Okay, so there's a balance. The sum of credits is equal to the sum of debits and vice versa. Let's do the same example except the business is repaying the loan of £10,000. So we're seeing a decrease in assets and a decrease in liabilities. So if you're decreasing assets, you're crediting assets, and if you're decreasing liabilities, you're debiting liabilities. So credit, this time I'll put the exact details of the account. So you're crediting cash 10,000, debiting loan 10,000, or you can say debit loan 10,000 or credit cash. So you put the debits in front of the credits. So we haven't dealt with income and expenses, which are the two elements of accounting. Basically, the way to think about them is that they're feeding into the credit equity side. They're an indirect part of equity. Why is this? Well, higher profit gives you higher equity. So to get a higher profit, you need higher income. And to get a higher profit, you need lower expenses. So if you have higher income, you're going to have higher equity. If you're lowering your expenses, you're eventually going to have higher equity as well. So the equation we went through for equity is that equity generally is the same as current year profit plus capital minus drawings plus prior year profit. So current year profit and prior year profits are your total accumulated profits. We can replace current year profit with income minus expenses. Okay, so if I have higher income, I'm going to have higher equity, and if I have lower expenses, I'm going to have higher equity. Now, to increase equity, we credit equity, and income is part of equity, so we have to credit income as well. And this makes sense because if you think about it, if you're increasing income, you're generally increasing money in the business. So if you're crediting income, if you're having higher cash, you're debiting assets. So that's why this double entry works. If you're increasing expenses, you're spending less money. If you're spending more money, you're using that money to pay the expenses. So it's the opposite. So we do debit expenses, and because we're lowering cash, we credit assets. Okay? So hopefully that summarizes the logic behind those. But basically, just remember, income and expenses will follow what's happening to equity. Now let's go for an example or two. So the business pays a gas expense of £10,000. Your cash in the business is decreasing as a result because you're spending money. So your assets have decreased by £10,000. The expenses increased by £10,000. And have we said the same thing? So you're seeing a decrease in assets and increase in expense. What double entries do we put through? Well, decrease in assets is the same as credit assets. Increase in asset is the same as debit expense. So we have credit cash 10,000, debit expense 10,000, and then we have debit expense 10,000 and credit cash 10,000. And I've put my formula up at the top to help you remember. Okay, let's do another example. So the business this time makes sales of £10,000. Cash in the business has increased. Okay, we're assuming, so assets have increased by £10,000. Sales have increased by £10,000. So we say income has increased by £10,000. Okay, so what's the entry? Well, we're increasing assets and increasing income. So we're debiting assets and crediting income. So debit cash 10,000, credit income 10,000. So the debits and the credits are the same. Okay, this time let's try another one. So the business this time has unpaid staff costs of £20,000. It hasn't recorded these, but it has to pay them, doesn't it? What's happening? Well, our staff costs have increased and our expenses are increasing. Our staff cost liability, we owe money, our staff cost liability has increased as well, so liabilities are generally increasing. So we have an increase in expense and an increase in liability. So we do increase in expenses, debit expense of 20,000, increase in liability is credit liability of 20,000. So you see the balance applies again. We'll do a final one. I think this is the final one. So this time the business has an additional tax bill of £20,000. It hasn't recorded this. What does it do? Well, think of it logically. Your tax expenses increase. Oh no, I have to pay money. So your general expenses are increasing by 20,000 and your profit's going down. Your tax liability is also increasing, has also increased. So you owe money. Liability has also increased by 20,000. What's happening? Well, we have an increase in expense and an increase in liability. So how do we account for it? Well, we do debit expense 20,000, credit liability 20,000. So to summarize, debits must always equal the credits in a transaction. This is how I remember which way to do it. So debit assets is equal to credit liabilities plus credit equity. The balances have to balance. And to increase income and expense, to increase income, we credit income. To increase expenses, we debit expenses. Okay. So thanks everybody. Please leave any comments, and I'd be grateful to know if you found that useful. Okay. Please put comments in the YouTube bar. Thanks. Cheers, guys. Bye.